Eromonsele Aziba, investment research analyst with AfriInvest, joins me to review the first trading week for 2017. Good morning, Eromonsele. It's great to have you join me on the program. So, 2017 starting on a very lackluster note, in spite of activities from the sale of treasury bills by the Central Bank of Nigeria. Let's start first of all with the equities market, where I just finished reviewing. Very, very heavy profit taking yesterday, 1.7% off. It looks like it's not a happy new year for the markets just yet. Well, we seem to be having audio issues there. Let's try to fix that and come back and hopefully have that conversation with Eromonsele. Eromonsele, we'll get back to you in just a bit. We're hoping to reconnect and sort out the audio issues. So we're getting Eromonsele to weigh in and talk about how this first trading week in the year has been, the year 2017, for the various segments of the market that we track, talking about the equities market as well as the treasury bills and the FGN bonds market. Since this week started, we've seen investors booking profit of most of the heavyweights listed on the Nigerian Stock Exchange. For instance, on Monday, on Tuesday when the markets resumed, we saw that coming in at 0.96%. On Wednesday, minus 0.46%, and on Thursday was the heaviest that the market had been dragged down since it resumed trade on Tuesday, down 1.07%, as I said, on the back of losses recorded by consumer and industrial goods, as well as some heavyweights on the oil and gas index at the Nigerian Stock Exchange. Even though we saw market breadth turning positive with 17 gainers, we had 16 losers recorded, and total volume declined by about 77.13%. Eromonsele, it's good to have you join me again on the program. We've been able to fix that audio issue, and we've got less than 2 minutes to have this conversation. So let's start very quickly, taking a look at the equities market.
Yes, so what we've seen this week is investors taking profits in most of the stocks that we saw that significantly rallied at the end of 2016. So all through the week, from the first trading day Tuesday up until yesterday, we had a negative performance in terms of movement of the ASI. But what we noticed yesterday was the downtrend that was recorded was majorly driven by losses sustained in DANXEM. From our analysis, if DANXEM was to be excluded from the broader index, the market would actually have closed positive, up about 36 basis points. So what we've seen is investors taking profit in most of these market bellwethers, and this is what has dragged the market southwards.
Well, unfortunately, Eromonsele, that's the much we can take. Hopefully, we'll get to sort out the issues early enough, so we'll start our conversation earlier. But thank you so much for giving us your thoughts on that segment of the market, talking about equities.